All right, welcome back. This is your June mortgage interest rate update. Obviously, all kinds of news as the Bank of Canada increases interest rates by 0.5 point. We're seeing some upward pressure in the bond market, although not as much as we've seen in the last few months. And there's some really great options for locking in coming down the road. And we're going to discuss all of those at the end of the video. So stay tuned. But before we get into it, do me that favor, hit that subscribe button, hit that notification bell, and please hit that like button so more people like you can see this video. And don't forget, we're giving away $5,000 in our 25,000 subscriber giveaway. You have until June 30th to enter that draw. All you have to do is go to 360giveaway.ca to enter, and you get an extra entry if you follow me on Instagram. And also, if you share the contest on social media. All right, so let's get into it. Let's discuss interest rates. We're seeing less upward pressure on fixed rates than we have in the last couple of months. That is because the bond market has priced in most of the interest rate increases that are expected, including a 50 basis point increase next month. So we're seeing a little bit of steadiness in that 5-year fixed market, with rates not going up as much as they have previously. Obviously, we're seeing variable rates go up by 0.5 point thanks to the Bank of Canada, and we're finally starting to see some really good lock-in options, which I'll talk about at the end of this video. But let's jump into it and let's talk about interest rates and where they are this month. So first and foremost, we obviously are seeing the prime rate increase across the board to 3.7%. This is thanks to the Bank of Canada and their 50 basis point increase. Pretty much all the banks have said they are going to increase prime by 0.5 point following suit. So we're pretty much good here. We don't have to worry about any of the banks increasing it in addition to that 50 basis points that the Bank of Canada increased it. And if you want to see all the details on that interest rate increase, you can go to the video from yesterday, which I will link right here. Now, moving into the 5-year bond rates. 5-year bond rates have settled down a little bit. They are still leading up towards that highest amount that we've seen in the last little while. So we're probably going to see 5-year fixed rates go up a little bit at the start of the month here. But the good news is for the month of May, we pretty much saw them remain flat, which is a big sigh of relief compared to the months previous, where we saw them increasing on almost a daily basis and by substantial amounts. So we're not out of the woods yet on 5-year fixed rates, but there is still good news here that we're seeing the craziness settle out in the bond market. This is the Canadian 5-year government bond. This is what 5-year fixed mortgages are priced off of. And as you can see, since about the beginning of May, it has remained pretty flat compared to that period from March to April. So let's jump into the full featured rates. We always talk about full featured mortgages first. These are the mortgages that have the best prepayment privileges, often have the least amount of restrictions, and quite often, if you're choosing what we call the A+ lenders, so the prime lenders that are the non-bank lenders that deal in the A space, well, they quite often have some of the lowest penalties as well. Now, the 5-year fixed rate as of today is 4.29%. This is the 5-year full featured mortgage for insured mortgages or greater than 35% down. Of course, insured mortgages and greater than 35% down payment are the least risky mortgages for the banks. Obviously, that down payment amount between 20 and 35% becomes more risky because it doesn't have insurance and has the least amount of equity. So you'll see those mortgages in a second that are priced slightly higher. But if you're getting an insured mortgage, 5-year fixed, or if you have greater than 35% down, bank on about 4.29% right now on your best featured mortgages that you can get in Canada. Now, for 20 to 35% down payment, you're looking at 4.29 to 4.59%. The lower rates obviously being for the larger down payments and the higher rates being for the lower down payments. 20% down payment used to be where you got the best rates. That is no longer the case. And that again is because those are the most risky mortgages for the lenders because they no longer have insurance and are the largest loan to value mortgages that the bank can lend without having that insurance. Now going into the 5-year full featured variable, you're looking at 2.8%. This is up from 2.3% last month. This is for insured and greater than 35% down payment. And if you're looking between 20 and 35% down payment, you're looking between 2.8 and 3.15%. So these are still considerably lower than what the fixed rate mortgages are going for. So there's still a good option if you are willing to take a little bit of risk. And if you're not, we've got an option for you at the very end that might be a better option for you if you're looking for a fixed rate mortgage, but not necessarily looking to get into those 4% interest rates yet. Now, moving into discount mortgages, these are mortgages that have certain features stripped away or certain restrictions, the most common being the inability to refinance or switch to a different lender, which can be a major problem, especially if you're getting into a variable rate mortgage or you're in a scenario where you could need to refinance at some point. And for the most part, that is most Canadians. By the way, the statistic is that 3 out of 5 people will not make it to the end of their 5-year term, which means that most people in Canada are probably going to have to pay a penalty at some point. And a lot of those are due to refinances and switches to different lenders. And with interest rates being so high right now compared to what they've been in the past, there could be opportunities to save money by switching to different lenders down the road. So you want to make sure you don't have what's called a bona fide sale clause, which is basically a no refinance or no switch to a different lender clause. Because if you have one of those and there's a 2 or a 3 year rate that gets really, really good somewhere down the road, you're not going to have the ability to switch to a different lender. And this becomes especially problematic if you have a variable rate mortgage, because if you do decide at some point that you want to lock in, you're pretty much at the mercy of the lender that you are with because you don't have the ability to go elsewhere. So they can basically charge you whatever they like if you want to lock in. And basically you'll have two options. It's you pay what they've suggested or you stick with your variable rate. And because you've lost that flexibility to switch to a different lender, well, guess what? You're pretty much stuck with whatever they offer you. So 4.09 is that 5-year discounted rate. I'd rather take a variable than a 4.09 discounted rate right now. I just think this product is not the thing that you want to have in this market, especially with that opportunity potentially down the road to take a 2 or 3 year mortgage and get a lower rate at some point. So I'd steer clear of this one. Same mortgage, 20 to 35% down payment between 4.09 and 4.39%. Now moving into the fully discounted variables, again, I don't love these because you lose a lot of flexibility. You can have really high payout penalties. By the way, another thing that certain lenders do on their variable rate discounted mortgages is they put 3 or 5% flat fee penalties in them. So you got to watch out for that because that can make it extremely expensive to get out of a variable rate. And by the way, one of the number one reasons why people choose variable interest rates is because they are cheap to get out of, because we know that most people aren't going to make it to the end of their 5-year term, and therefore having a variable rate, regardless of what interest rates are going to do, becomes a really good option if you're going to look to avoid a penalty at some point. So not a big fan of these. Anyways, 2.55%, 5-year fully discounted, insured, or greater than 35% down payment. If you Google lowest rates in Canada and you find a really low variable rate, that is likely one of these mortgages. And if you look at the 20 to 35% option for a 5-year discounted variable, you're looking at 2.55 to 2.90. Now, a product that has come available recently that I really like for those who aren't sure about variable, aren't sure about fixed, but want to be somewhere in the middle is the 2-year fixed product. Now, this is good for people who are buying because it allows you to qualify at a higher amount because the qualifying rate is still going to be in that 5.25%, 5.39% range. It's good for people who want to lock into their variable. In fact, I'm suggesting to people who want to lock in their variable right now that they look at a 2-year mortgage. I'll show you what the rate is in a second. And it is just an overall good option if you want to have a fixed payment for the next little while and kind of see what interest rates are going to do. So that rate, as of right now on the 2-year mortgage, is 3.39%. This is for insured mortgages or greater than 35% down payment. Goes up a little bit to about 3.59 if you're on an uninsured mortgage or between that 20 to 35% down payment range. But this, in my mind, is a phenomenal option for people who want to have the best of both worlds. And we've been suggesting that we wait until those short-term mortgages come more in line with the variable rates. Well, in about a month, when interest rates go up by another 0.5 point, you're going to see variable rates at about 3.3%, which means this becomes a really good option, especially considering the fact that we're going to see more interest rate increases down the road after that July interest rate increase. So I'm loving the 2-year fixed. I don't know how long it will be here. It may go away very soon, but this in my mind is something that you should be looking at if you're looking at variable or you're looking at fixed or you're looking at locking in. And if you want to get access to this, it's not available at every lender. We know which one it's available at, and we're happy to help you get it. Oh, and by the way, a big component of the 2-year rate strategy is obviously having a strategy around what you do after 2 years. So if you're just going to want to know where to get this rate, call pretty much any broker. They've all got access to it. But if you want us to help you get it for you, and you want to have us help you build a strategy for the next 2 years, we would be absolutely happy to help you. And all you have to do is go to mortgage360.ca, hit the apply now button, and we will gladly walk you through a 2-year strategy and make sure that we're doing all the things to make sure that when 2 years is up, you're in a really good place from a savings perspective and also from a mortgage perspective. So those are the interest rates for June of 2022. If you found this video useful, do me that favor, hit that subscribe button, hit that notification bell. Please hit that like button so more people like you can see this video. Don't forget about that race to 25,000 subscribers, and we'll see you on the very next one. Cheers.